watching Market Pulse with us on BTVI. Well, UFO Moviez is a stock which is in focus as the company has entered into a strategic tie-up with United Media Works, which has a digital cinema technology and has over 300 screens. Well, the stock today is trading higher by 1%, but in last 1 year, it's not done that well. In fact, the returns have been on the lower side. In last 1 year, the stock's down nearly 14%. But let's get a better sense on this tie-up from the company's management itself. We're joined by Kapil Agarwal, who's a joint MD at UFO Moviez. Hi, Mr. Agarwal. Good afternoon to you. Thanks very much for joining us on BTVI. Could you tell us the financial implication of this kind of tie-up with United Media Works?
I think it's very simple that United Media Works, we have a network of more than 5,000 screens. And we are monetizing the advertising inventory of more than 3,700 screens around the year. So we are a pretty large network. The smaller networks which came up around India, with 200, 300 screens, obviously they are not able to monetize it to the extent that we are capable of monetizing it. So this is a very strategic alliance which is actually beneficial to both the companies, where we will be, now these screens are getting added to our network, our advertising network, and we'll be monetizing them. We'll be able to monetize them on a per-screen basis at a much higher level than they could do. And obviously, that prosperity will be shared. So this is the whole idea of the strategic alliance.
Right. Mr. Agarwal, I want to know the financial implication. Will there be any kind of revenue sharing between both the companies with this kind of tie-up?
Yes. Yes.
What is that kind of revenue sharing then?
No, it's not in percentage terms. So what we have done is that we have bought out their advertising inventory at certain price, and we are confident that we'll be able to monetize it at a much higher price eventually. So that adds to our bottom line, while they will be getting a price which currently they are not able to monetize. So this is the kind of deal. Numbers, unfortunately, I can't speak because we are bound by a confidentiality agreement between UMW and us.
That's fine. If you could just give us a ballpark figure, what is the difference that they are, monetizing, and you're saying you will be able to monetize it better? So what is the kind of percentage that you're looking at?
I think in the current year itself, whatever we have to pay them, anywhere, 50 to 100% higher, above that we should be able to monetize. And that really goes without maintaining that network and without, without investing in the screens, without investing in the equipment, we'll be able to directly add to the bottom line. And it's a win-win situation for both of us, because they will get the money which they are not able to monetize right now, being a small network.
All right. And by which quarterly earnings can we see the impact, in your earnings?
The migration will happen within this quarter.
Okay.
I think in the next couple of months, the migration should happen, because, we have to replace their servers by our servers to be able to, deliver our content. So there are some 300 servers have to be replaced, which will take at least a month and a half to 2 months. So within this quarter, we expect to complete the migration, and you will start seeing the impact from next quarter.
What kind of contribution will a tie-up like this will have on your top line, bottom line, as well as on your margins?
Well, top line, there will be, because everything will pass through our network. So today, for example, when we do any additional advertising revenue, almost more than 50% of that goes to our EBITDA. Here, obviously, 50% will not go to the EBITDA because, so top line, if top line goes by 100, and if it is say 50 or 60 going to them, so obviously, our top line, and after meeting our expenses, so probably a lower percentage will go, but it will add directly to our EBITDA and directly to our net profits.
Right. Mr. Agarwal, my last question. You had given guidance of about 20% ad growth for FY17 and also for FY18-19 about 30%. Are you on track to achieve that?
I think 18-19, we are still, confident about achieving this 30% growth. FY17, I have still not received the numbers, but let us see. We will, I think, declaring the results next month. We are compiling all the data. It's a very complex all India data, so we'll be able to compile it in the next couple of weeks, and then we'll be making the press statement on that.